So one joining today is Forgings. It's amongst the largest exporters of forgings from India. It manufactures steel forgings and fully machined products. Trades at about 12 times FY16 EPS, so not terribly expensive. Let's get in the management on the show. Mr. Vidyashankar Krishnan, MD of Forgings, joins us on the show from Chennai to speak about the company and the outlook ahead. Good having you, Mr. Krishnan. Thanks so much for joining in. We understand that you are one of the largest forging exporters in the country. How is the market looking currently? Because your stock is certainly found favor. It's run up sharply in the past few weeks, as well as the market sees you as a really good play on the US CV cycle recovery.
Morning, Neeraj. Exports are looking positive with the US market pretty strong. Both the commercial as well as the passenger car space there is doing pretty well. And that augurs well for the Indian component industry. Lots of opportunities in the North American market.
So, how big could these opportunities potentially be? Because while we understand that, yes, the opportunity is big and a lot of people can come in, for Forgings as a company, how big could this opportunity be? Can you put some numbers to that?
I wouldn't place any numbers directly, but I would say that we are a very small organization in the global scheme of things. Our total turnover, let's say we are scheduled to hit about 500 crores this year. Translating that into dollars is about $90 million or less, $85 million. That's a teeny-weeny drop in the big scheme of things. And there is a huge scope for improving our sales outside of India, particularly to North America and Europe as well.
Right. Mr. Krishnan, what kind of operating leverage do you think the company can enjoy over the next few quarters, given that you've been adding capacities as well?
Can you clarify what do you mean by operating leverage?
I believe the uptick in the margins. So since you've been adding capacities, okay, I'm guessing you're producing a lot more at the same cost. So what's the kind of operating leverage that you would get?
I would say these margins that we have sustained in the last couple of quarters should carry through over the next few months and a couple of years ahead. See, as it is, we have, I think, improved our margins quite a bit. And there is a little scope for upside, but not much.
Okay, so in light of that, how would earnings grow for you as a company? I mean, you mentioned a top line target or run rate that you would hit in this year. What about the next 2 or 3 years? How does the story look like on the top line? And how would earnings grow if indeed margins are to remain constant?
Earnings would naturally have to grow on the back of revenue growth. I think that's a given. With a little bit scope for upside on the margin side, I would say we should hit about 15% compounded growth over the next 3-4 years.
Mr. Krishnan, you did about 11 rupees as EPS in the second quarter. Is 45 per share a fair estimate, say 4 quarters from now, or do you think that's a little bit of a stretched estimate?
I don't think so. I think given us holding top line at least, if not growing, and also equivalent margins, similar margins as now, 45 EPS should not be a big deal.
So you're saying you will be able to exceed that also in the next 4 quarters?
Yes, that should sustain at the very least. I wouldn't like to put too much on the block right now. But as of now, the way things are headed, with some little bit of growth coming in at least, we should be able to easily improve on that.
Okay, one last thing. Since you mentioned that you're a small company and there is a lot of scope to grow, would you need to raise any equity funds to fund any expansion plans that you may have in place?
I think as of now we are not so leveraged. There is scope to add considerable debt itself. Since the debt route is traditionally considered cheaper than the equity route, we should grow with debt itself. Raising equity right now is not on the cards.
Is there a capacity expansion plan in place? We haven't quizzed you on that. What's the roadmap?
As of now, we stand at about 40,000 tons of production capacity. in about 9 to 12 months, we should be looking at about 52,000 tons. And we will keep adding and debottlenecking our capacities as we go on. So that is the reason why most of our growth has been organic and will continue to be so in the months to come.
Okay, Mr. Krishnan, good chatting with you. Thanks much for taking time out. That's a very bullish commentary coming in from the management of Forgings, who believes that they will be managed to clock in stupendous EPS growth to the tune of about almost 45 rupees per share, as opposed to the 11 rupees per share that they currently do in just the next 4 quarters. If nothing, actually managed to beat that as well. 1.25% higher for Forgings, and it's been a triple-digit run-up that the stock has seen in just the last 1 year. Year-to-date returns, that is. But take a look at the FMCG index. That's the one which is topping the charts in trade today, sitting at record